No surprise there. Their facility rate unchanged at negative 40 basis points. They do change their forward guidance on interest rates. They will buy bonds until December. They will buy $30 billion worth of bonds until the end of September. So we did get that announcement where they finally make the end of QE at the end of December. Let's go right now to Bloomberg's Matt Miller, who is live in Latvia, where the ECB meeting is. The euro spiking on the news, Matt. And the ECB, I should say, I want to point out this redhead that just crossing, going to keep rates unchanged until at least the summer of 2019. It sounds like they got their cake and ate it too.
Yeah, it's fascinating, and I think the positioning going into this meeting has a lot to do with the movement of the euro. So even if we get a more dovish stance from Mario Draghi during the press conference, who, by the way, just drove in a motorcade behind me into the Latvian bank building, you still may see the euro gain. This will be, by the way, if the euro gains against the dollar by the end of the trading session today, the first time in 6 European central bank decisions that we've actually seen the currency gain against the greenback. So it has a lot more to do with the positioning maybe than it does the message. Most of what the ECB is saying here will be expected, with the exception of that fascinating interest rate sort of on hold headline that you point out there, Alex, and of course the timing of an exit from quantitative easing.
And we're just getting some more headlines here. So to clarify some of the positions, the ECB says their asset purchases will be about 15 billion euros a month from October to December. So going from 30 to 15 to 0 in December. They're leaving rates unchanged until at least the summer of 2019. Those are the two big headlines that we're looking at.
So they're racking up debt, and it's interesting because the euro is gaining strength on the dollar. And for my personal opinion, I want interest rates to go back up. I feel like if they keep the rates low, it will keep crypto prices low, because obviously with all this extra money they're able to pump into equities, it's going to keep the market pretty strong, and cryptocurrencies will probably be a little less attractive until we get that custodian solution filled up. But interesting trend to follow, and if the dollar does continue to devalue and the euro becomes stronger, that's a very, very important trend to follow. But when it comes to cryptos, I would love to see the interest rates go back up, and if central banks decide to just not raise rates and allow and keep buying these bonds and keep pumping money into the economy, it's going to make obviously a financial crash eventually happen, but they can keep kicking that can down the road. And I do think that's just going to make housing prices go up, obviously, and equity markets go up. But let me know your thoughts about this and the effects on the crypto market, and I will talk to you guys soon.